Welcome to the PivotBoss Premium Trading Room. I'm Frank Ochoa, aka PivotBoss, and thank you for joining me this afternoon. We just wrapped up a pretty impressive first day of the new month, first day of the new quarter, and again, that was all kind of based off of that early NFP number. We were trying to figure out what was going to happen early on. We knew significant movement could be seen to begin the new month, and we got some tremendous movement here today. We'll talk a little bit about this right now. First of all, if you're not familiar with me, I am a Frank Ochoa, and basically if you go to pivotboss.com, I can bring that up for a moment, you'll be able to get a little bit more information about PivotBoss and what we do here. There's a lot of great free analysis here, pre-market reports, closing reports, a lot of great educational content as well. We also offer a trading room with a modest monthly subscription. We also have some premium education, and also my book is available, Secrets of a Pivot Boss. If you haven't heard of the book, I encourage you to check it out. It's received some fantastic reviews from traders all over the world, and it's really a book I'm proud of. I do believe it helps traders begin to visualize the types of opportunities that you want to see in the charts. So it's something that you definitely want to take a look at. If you want learn a little bit more about me, you can go here to About Pivot Boss and read through kind of a little bit of a bio and some of the things that I focus on here at Pivot Boss with regards to my research and the types of tools and indicators we build. Without further ado, let's go ahead and take a look at the markets here. I was going to I had a lot of interest going into today because obviously we had non-farm payroll this morning. We had the end of a very strong quarter, especially heading into March. So if I bring up something like the ES here, this is the ES in a daily time frame, and something that we've been talking about for a while now was the rejection off the recent lows here, the rejection off of 1800s yet again. That was very important. Obviously, we had this low here that we were concerned with. And we also had the 1804.75, which is the August low from 2015. And when price came and failed to hold below that zone, the first indication was that we would likely rally back to 1941 and likely continue across into the HVN at 2061 with a shot at seeing that the top of that range there at 2077. Half. And so far we've seen a significant continuation to the upside. There was one point here where we started to see a little bit of weakness, significant weakness, but price was defended right here off the HVN. Bulls then got a big time short squeeze ahead, and then from there defended the previous month's high and continued higher the rest of the session, or the rest of the month. So from the middle of February over to the end of March, that's about 6-7 strong weeks of steady uptrending price behavior right to the HVN. And that's really something we talked about before. And I know one thing that, especially for the traders in our trading room, one thing we really focused on is identifying the impulse key ranges from any time frame. So when you have an impulse move where, say, price finds a high and auctions continuously lower until it finds that impact low. From that low, it bounces back into the midpoint of that range. Right there, you now have a key range that gives you the underlying, sometimes hidden support and resistance levels, including any extensions that come outside of that range. But one of the most powerful concepts in all of technical analysis is failed range expansion. And when you have this previous low here and price barely gets below it and is not able to see any momentum or acceptance but beyond that previous range, you typically see a major reversal back across the range, first to the midpoint and then to the edge of the range. And that's why we were so confident with our call back in mid-February that we would likely see a big time rally right to this HVN. Additionally, what we talked about was if the market is seeing rejection down here, then the market is likely going to see price auction back to acceptance. And this significant HVN right here is a big marker right there, a beacon of light that says this is acceptance. Anywhere you see a big HVN like that on the volume profile, obviously that's acceptance. That's where the market found fair facilitation of trade between buyers and sellers. The more time and volume that trades at a price, the bigger the HVN that builds out. So anytime you see rejection, the tendency is for price to snap back toward previous acceptance or to establish new acceptance. In this case, it snapped right back to 61s. So for those of you that have followed the pre-market reports, this is something I've talked about, and the closing reports is 2061, 2061, 2061. Again, sometimes I sound like a parrot when I talk about some of these levels, but ever since price was able to hold above the 1941s, especially on this squeeze day, it was full guns a-blazing into 1961s, and we finally reached it. So what does this mean now moving forward? To me, we've pretty much nailed the first quarter of the year with regards to the major price points and the major price swings. And that's really my ultimate goal, is to know at the earliest moment when we're changing from one direction to the other, or when we're changing from one phase to another. And what I mean by that is the market moves between phases, market phases. It's the personality of markets theory, which basically suggests that the market moves between phases over time, never staying in the same type of phase. You know that, when price goes from a trading range or compression, and then it sees expansion and a markdown out of that range, a trending phase. Then more trading range and compression, and then a markup expansion phase and a price discovery phase. So my goal is always to identify the key points of any impulse range so that we understand the underlying price points, understand where the major high volume nodes and low volume nodes are in the chart, and then from there try to understand when price is going to fail to see acceptance beyond a key pivot. Any failed acceptance beyond this area would be rejection. A failed range expansion snaps price back in the opposite direction. Anytime you get a breakout from this type of range here, you know that there are now buy stops above this area where the bears had been short. You hunt for the buy stops. You try to see who's positioned where and where are the stops. And from there, you look to take care of the momentum trade in the direction of the stops release, right? And in this case, we saw a big time continuation up. So what we've seen this year so far is the transition from this phase to end the previous year, which helped us identify that this was likely coming, if you recall. And then we went to a downtrending phase, then we went back into a range phase, and now we've seen a markup uptrending phase. I think what this means for the upcoming quarter, at least for April, is perhaps a trading range type of market. And this is what I've told our members in the trading room as well, is that if the market comes from rejection down here and goes back to acceptance, then the market's trading in this area because it wants to. And at that case, you're likely going to see some sort of trading range develop. So I believe that at this moment, we're still hunting for the high. At some point, we're going to find some blow off top. And when we do, you're likely going to see a quick rejection in the opposite direction. You're going to see a quick rally, and then perhaps see that trading range develop. Very similar to the gold market, which we'll review soon. But so right now, we're seeing continued uptrending price behavior, and the idea was 2061 was the ultimate target. Anything beyond that is kind of gravy into 77.5, perhaps even up into 84s. So we'll watch that to see how it plays out. But I think once you start to get above 2080, 2100, you're going to start to become a little bit overextended. And at that point, there's some low volume nodes here. That's when you may snap back to value and perhaps rotate lower. So we'll be trying to find where that top is. And right now, it's still a buy the dips type of market until proven otherwise. So we're still upward trending, still in a price discovery phase. Once it finds that blow off top, you'll see some sort of range develop, and then you may see price trade in this HVN. Now, if we back out of this a little bit more, something that I'm noticing here, obviously, is something we've talked about, is this kind of rounded off pattern right here. And, usually that's an ominous pattern. And this is about the top end of that pattern. If we start pushing to 2100, you're going to start to break that pattern. But this is still in the area where it could continue to base out up here and then boom, see a drop in a retest back at 1800. So we're trying to figure out what's going to happen in this area. We go from trading range here, middle of last year, to a sell-off in the summer. We come all the way back up, and then we hold those highs into the close of the year, sell off to begin the year, and now back to these highs. It's not out of the question that we see another range develop. That's why I mean, after you see an aggressive trending month and a high activity with a big time volatility quarter, you're likely going to follow that up with a very quiet trading range quarter. So just a couple of things to consider, although nothing super actionable at the moment. Once we reach a major target like this, now it's time to just watch and wait until the next major pivot occurs, and then we can directionally trade in that direction. But right now, we reached a big time pivot, and now we got to see where that high is before we begin to distribute. Now let's take a look at the intraday time frame. Here's the ES and the intraday here. This one's, this one stepped up very, very nicely. And one thing we were watching for in the trading room this morning was we thought the bus was too full to the downside. There was too many shorts. And so especially in crude oil, since crude oil opened at 8 a.m. this morning, we were looking for price to squeeze at some point. And I thought it might happen right after the open because the market had gotten too short heading into the open. The open was basically near the lows. But it didn't squeeze. Instead, crude oil chopped and dropped below it. And so then we turn our attention now to the ES and the NQ at the 8:30 open, and again, it didn't squeeze. It just popped below a couple of times. Well, upon trading below the open, but not really establishing new lows, we thought, okay, at some point here, when bulls overtake the open, you're going to look for a push through it and then a defense at that area. Once that defense occurs, you may see a squeeze back up toward the midpoint. We were just looking at a midpoint retest. And then once price started to push through that area, I mean, that was a huge, huge squeeze. That's when we thought, okay, 2051's VPOC is on the docket. But then, obviously, pushing back above that area and defending it here later on in the morning, that's when things really took a turn because this had been an area 2055 where bears had been defending on several rotations. And then once price pushed through that zone, the stops came out and a continuation was seen. So far, here we are, trading on highs. You see a VPOC shift up right now. VPOC shift up from the 2054s up to 2064.75 and a big time rotation. Anytime you see this type of major rotation off of early weakness, we knew the squeeze could come, but it went double time to the upside. That's significantly bullish right now. So there's still some more upside to be seen. And if you look here at the ADR calculations, the ES had been trading basically 19 points per session, 19.5 points per session. That's of range, ETH range over the last 10 days. So the 10-day average daily range has been 1950. Today it had a range of 3175. That's 152% of average daily range. Anytime you see anything over 125%, but especially 150, 170, 200, that really tells you that there's some volatility really coming into the market. And at that point, you could see some significant pickup in pace and tempo and those types of things. So to start the month this way bodes really well for early movement to begin the month. But we'll see how much continuation we get because, again, we could be looking for that top before that distribution occurs. So that's really important right here. So if you wanted to see how and where you could find out when the reversal is going to happen down here, because we were all looking for it. Everybody knew it. I didn't have to tell many people that the bus was too short at one point, and then now what we were looking for was the open price. So this is the open, the 8:30 open. There's the flag right there, 2038 quarter. And if you have the market that's significantly down here and the open happens and you're not really printing new lows, you're seeing a rejection, that's the number one thing to watch out for. Is there a failed new low? If there's a failed new low, watch that pivot that the defense is happening off of, because if it squeezes through the pivot, when it comes back, that's where the defense is, right? That's where the bulls start to really get it, and then you start to see the squeeze ensue. So at the earliest point, that's the major pivot right there to watch out for, and it happened perfectly. So that's pretty solid the way that played out, but we'll continue to watch the ES as it develops. I think there still could be more upside, at least into 77.5, maybe even ahead of that. As a matter of fact, let's bring up a Thinkorswim for a moment. Here's the ES with Thinkorswim. And if I bring up a style here, let's load up the ADR method style. Here's the ES trending higher. And these are the ADR method targets right here that we're looking at. And let me bring this back up. Here we go. Basically, on these ADR method targets, what we're looking for here is this low. So that's the low of the week. And if you have a pretty high confidence factor that a low of the week is in, you're looking up here for your targets. This is your scaling target, and that's a 50% target of average range. This is 75% target. That's the primary target on any given week. That's 75% of average range. This is a 100% target, so that's basically average range, and this is a 125% extended target. And that's what we're looking for. If you're in a unidirectional trending market, what you can do is you can bring these up, and in an uptrending market, when you find the early low for the week, so once we knew this thing was been trending up this entire time, right? So the goal is always look for that early week low, the Monday, Tuesday low, and then once you find it, trade it up into your upside targets. This right here is a 100% target. So from this low to this high, price basically traded an average range over the last 10 weeks, the average weekly range, that was perfectly what it traded. When price dropped into this low here, it rallied up into the 50% held. Early the following week, here's a Tuesday, Wednesday reversal, and up into the upside targets. This one was a little bit of a pullback week, didn't really do much. This week held and then rallied into the first target, coming close to the second. So in an uptrending market here, the idea is to buy the early pullback and trade to the upper targets that are measured by average weekly or average daily range. So this indicator right here is called the PivotBoss ADR Method Targets. ADR Method Targets. And down here is the ADR method indicator. So this is the advanced indicator. And basically, this advanced ADR indicator helps you calculate average daily range on a 1-day basis, 5-day, 10-day, whatever you want. Also helps you calculate what the current day's range is. So if you look right here, this day right there, it was 31.75 points of range today. The previous range, you can see it's this magenta color. That tells you that the previous range was very narrow compared to average. And whenever you see these pink days, you should typically expect high volatility expansion day the upcoming day. And we see a high volatility day. That definitely occurred. But so this is what we're looking at right here. And now the point of this is to say we just started a new month. So if I bring up the monthly pivots, the monthly targets, today's the first trading day of the month. We saw a significant reversal off the low. You want to know the last time we saw that? The last time we saw that was the first trading day of March. Price came down and saw a huge squeeze event, and we never came back. The low of March was also on the first trading day on the first morning of March. Is that going to be the same thing this month? Who knows? But if this low at least holds for a little while, then we can look up, and our primary targets for the month are now the upside targets here. So you can see these four are for the month. Now, if this low remains intact, and that's 2035 quarter, then an average range month would take you right up to this target, 2194. So in an average month, over the last 10 months, this should be the average range we see. Now, we don't always play to the average target because markets don't move in perfect averages. So according to the research that I've conducted over the years and years of data, I like 75% as the primary target. It gives you the most bang for the buck in terms of distance in your favor, and it also gives you a high probability target. So this target from research typically gives you 80+% of the time you're going to reach this target when you find a key pivot low. And so there's a good shot there. But you have to be very confident of the low. And it could, even if it just tested early that month and then you hit these targets and then the rest of the month you're down here, well, then that's okay. Because the idea is if you find the low, at least get the move that's equidistant to what's probable for that given average for that month or week or day. So in this case right here, developing off of this low, if it continues to hold, then this is a good high probability target, 2114, and with a great shot at seeing this by the end of the month. And again, these are monthly targets. If we instead find that blow off top up top and come and fall shy of some of these targets, then we could flip this indicator around and then bring up the bear targets. So in this case, I can double click this indicator, and if you're bearish, if you have a bearish sentiment or a bearish bias, boom, now you can just pop up these bear targets, and now we have these in essence in effect here. So here's the high for January. We knew January had a high probability of being a down month, especially if this support didn't hold here. And there's the first target, second target, third target, comes up and bounces off of the 50 and then drops into the 100% target and beyond. But when you have a high probability odds of knowing that something is a high or a low in a current trending move, you can then pick off these targets. So we could have some more upside ahead. That's the point. How much higher? We'll see how this goes. Obviously, if I bring this up here, the best odds is I like to use the weekly targets unless I'm at a major turning point. So weekly targets are always best for me, at least short term. So next week when we come up Monday, we're going to get a great odds to see, hey, where the target's setting up. On a monthly basis, right now we could be headed a little bit higher into those 2114s, and that could be the next major target to the upside before things start to get a little crazy. Now with regards to, obviously we have a new month that's just come up. Absolutely. So that's great that you mentioned that about PivotBoss Masters. There's going to be a little bit of announcement about PivotBoss Masters. Basically, you can save the date for next Wednesday, because next Wednesday I'm going to be doing a webinar talking about Masters and all the things that are coming into it, because all of these tools, now that they're finished here, are about to get the Masters treatment in terms of education. In terms of the training materials and the lookbooks and all that stuff. So all of that's coming to Masters, and it's going to be being rolled out here over the next several weeks, and it's going to be fantastic. So all of these tools are going to be there for you as well in Masters. So if we take a look now at the ES from a PivotBoss Pivots perspective here, here's the PivotBoss Pivots. And the PivotBoss Pivots are fantastic because they're just based off of price. The previous high-low close is all that's really using. So the previous high-low close of the month in this case, so that's the previous month's high, previous month's low, and the previous month's close. So that's basically the close of the previous month, which is what closed yesterday. That's March. So this is the March levels. And so what it's doing is it's looking at what's this range right here, and then it's forecasting 25, 50, 75, and 100% range increments to the upside. It's also plotting the pivot range for the month, which, as you know, the pivot range, the bottom of the pivot range, is the midpoint of the range. So there's a lot to like with PivotBoss Pivots here. And I would say that if price is able to push through 2075s here, the next upside target on the PivotBoss Pivots would be this 2098 level, or 2099 zone right here. That's the 25% level, and that gets you right into this edge up here where you may see the first pullback, and then we see if this thing's for real, or do we find the top. But this is getting up there pretty good where this is going to start smacking into resistance. Absolutely. Yeah. No, the webinar next Wednesday is going to be open to anybody. So it's not just for premium members. So you'll see an email about it. You'll see it go on Twitter. It's open to everybody. So premium members, Masters members, and if you're not a member, you can all come. And basically it's just to show everybody, to show current members what they're getting for free because they've already paid in, and to show prospective members what they're getting if they pay in, which is basically just a one-time fee to get in, and from there, all the new content that comes, all the new indicators that comes, it's all built into the price for you. So that's all coming up next week. But this is all fantastic the way we've kind of built it out here. All the suite of tools that we've built out for Thinkorswim, for Market Delta. We've got some things for eSignal. I just finished up a fantastic coding blitz for Visual Trader, OmniTrader, and I know NinjaTrader's been highly asked for, so that's coming up. I've also had some traders asking about Sierra charts, Rancho De Niro, so there's a whole lot of work to do with getting some of these indicators out there, but these are fantastic tools that I think anybody can use. I wanted to take a look at crude oil. So here's crude oil. Here's the daily chart of crude oil. We've had this one pretty much locked in pretty well, again, especially to begin the year. And right here, this would be fantastic. Let me see here. Let me see here. Let's see. Wouldn't it be a good idea to take some time and read your book and then return? Oh, cool. Yeah, you know what? The book is fantastic. The book is truly fantastic. And anytime you read that book, I think that's a book that you're going to find that once you read it the first time, it's going to create so many aha moments for you. You're gonna get that, wow, I've never thought about it that way, or man, that's an interesting way to think about this, or that's how they do that. I think you're going to get a lot of those moments when you read the book. And I think what you'll find is you're going to be eager to jump into the market right away, not in terms of actively trading and putting things together, unless you're already, you've got an approach, but in terms of just engaging the market from an analytical standpoint of utilizing these newfound approaches. And I think what you'll find is you'll come back to the book to read it a second time and a third time, and sometimes even more. I mean, I can't tell you how many traders have come to me and told me, either in person or social media or email, and said, I'm on my fourth reading of your book, or I'm on my fifth reading of your book. So I think you'll see that definitely if you set some time aside and read the book and get through it, I think it's going to be definitely beneficial. And when you come back with fresh eyes with the market, I think it'll be very beneficial. So here's crude oil. Thank you for the question, by the way, and thank you for buying the book. Here's crude oil. One thing we talked about with regards to crude oil was right here, this day. That day right there. And if you recall, we had this key range. So again, this goes back to our key range. Identifying the key ranges, which is this high. Price goes up here and sells off, sells off, sells off, sells off, sells off, until it finds this low, and then it bounces all the way back up to the midpoint of that range, right about this point. And then once it got up to that area, it sold off, and then it came back. Here's the retest, and this is when I said, okay, I think we're going to go head for the low. Once we got outside the low, this is what we told our traders. Said, listen, just because we break the low doesn't mean we're continuing lower. You have to watch for the false breakdown. You have to watch for failed range expansion. Because if this thing can't hold and it pops back above this level, it's a high odds trade that it's going back to the midpoint of that pattern with a shot at seeing a move all the way back to the top of that pattern. That's the same exact thing that we called in the ES. That's the same exact thing we just talked about. Only this one came outside the range. The last one, the ES, barely just wicked it and then reversed all the way. Well, this is the exact same thing, only this one happened more emphatically, I think, at the beginning because more bears got trapped down here. You get trapped below support as a bear. If you don't get paid, your buy stops are up here, and that becomes part of the momentum move up. So we were able to really home in that this was the low. And this was the period where we were heading lower. When we found this low right here, that one I wasn't as confident about. But once we hit the midpoint here, we knew that failing to hold right here on this day suggested weakness back toward the low. And we saw that materialize. But over here, this was the most significant point in the chart because that is the failed range expansion that we look for time and time again. And you can see what happened, and you can see how price just rallied across that range exactly as it was supposed to. So for those of you that have been following the pre-market and closing reports, once price pushed through here, pushed through this high and came back, we were talking about 36s before. That was the LVN. Price came one tick through it or so and rallied right into 42.50, and that was on the previous contract. But rallying right here into 42.50, that was significant. That was a significant key level for us. You can see the rejection that occurred off that level. So that was the first point where we said, okay, now we're probably at a high point here, and we're probably going to come retest this recent low. And so that's what happened here. We came down. But what I was talking about before was defending this low. I said that's an LVN. See, we defended it before, so we were looking to defend it again until 2 days ago when this happened. When that happened right there is when I switched my tune and said, watch out. Now you have to watch out. Because, price came into it and it initially bounced, but then you can see what happened afterwards. So basically when price came down just shy of it here, just shy of the level, bulls came in and defended and rallied way up, and then there was a significant rejection up there. So just think about it this way. If you're long and you're long from here, you have your sell stops that you put down below that level. Well, if this is a significant LVN that you're wanting to buy, then having sell stops under that level heading into it is not conducive to a rejection. It usually leads to this type of action. So you can see exactly what happens. So that's why I softened my stance on that LVN and said, you know what, watch out, because I think we might be headed here instead now. Because if we cannot hold 37.65, the expectation is that price is going to drop into the next HVN below, which is 35.17. That's a big time level there. So this is a big time push the way we saw it. But one thing that I saw before is anytime you get below a significant support level like this, there is a tendency to get a big squeeze. So you can see right now prices are below this level. Here it is. I would say Monday you have to be careful, because if price gets above 38s, these participants could get squeezed very quickly all the way back up. Otherwise, defending and staying below the 37.65 level implies a continuation into 35.17. So what I would be looking at Monday would just be if price pushes into 37.50 to 65 right here. That's an area where bears want to defend for a continuation into 35.17. Above this level, squeezes all the way back, higher into 40 and perhaps all the way back up across the range into 42.50. So this is the big time pivot. We don't really have one of those right now in terms of the ES, but crude oil definitely has a key level to watch out for heading into next week. So watch that. One thing that makes me believe that if we do squeeze above 37.50 is just how today played out. It was very, very odd how crude oil played out. It was very sluggish, very heavy. We were looking for the same type of short squeeze in the ES and NQ as we got over there. We were looking for that first in the crude oil chart, and it never really materialized. And this is what I mentioned this morning when we were getting downtrending behavior. It was significant weakness. Boom, 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 boom. And here we are heading into 8 o'clock. So that's the open price right at 8. This orange line is the open price. You see how significantly bearish this was? Trending lower, trending lower. When we get to the open price, this is when I said we're about to open on lows. I wouldn't be surprised if we don't squeeze first, and then after the squeeze we see more weakness. And it never happened. Instead, we dropped first, and then it looked like the bears were being trapped below the open. So, it was almost like salivating, waiting for the squeeze to happen, and it never materialized. But in looking at the footprint, there were so many times where I had the finger on the trigger looking for that point, and it just never showed up in the footprint. Instead, what you saw was a lot of buying balances coming into the footprint. Every time you saw a sell imbalance, there'd be another 2 or 3 buying balances behind it that really softened the blow and got it, pushing back to the opposite side. So nothing really happened, so I stopped watching it, and it just did this the rest of the day. So that's That's pretty wild the way that played out. But what you have is that 37.20 now. You got a bend in the 5-day profile. You can see this hump here. If price pops above this zone, you're going to see all of these bears that came in to defend may get their stops run, and that could be a quick move back to 38.27, and that's 5-day value, 5-day VPOC right there. So this one right here is big time. Again, 37.20 LVN right there. If price does rally up, again, 37.65 to 37.50, that's the first zone where you could see some weakness, but above there completes the move into 37.27, 38.27. Pretty big there. So I wanted to talk about a couple of those. I also wanted to check out, if y'all wanted to look at some stocks here, I had some scans that I was going to run just to look at some stocks in Thinkorswim. I pop up some scans here on a Friday just to see an advanced snapshot of what might be coming up for the upcoming week. So if I bring up a couple of these, let's see here, bringing up, we're pushing up. We probably have some pretty good. So basically all I'm doing here is this is a basic scan based off of some of the price-based scans that I have in the book. So there's some basic price-based scans that I have in the book, and if I go down here to load style, I'll pop up the signals. And these are just the base, so these are unfiltered algorithms. They're just kind of going through here looking for a specific idea in the charts. And this scan is looking for any type of rejection tail like this. This tail right here has a lot of different little calculations that goes into it, so it's not just a basic hammer or inverted hammer or any of that stuff. It actually has some different calculations in it as well that measures all the different portions of it to give you a better idea if that's going to be a rejection tail. So this one right here, basically anytime I see a rejection like this, the first thing I'm looking for is where is that rejecting off of. This one rejected off the previous month's low. If it's an area that sees a big zone of confluence or area of rejection in the chart, and I like the signal, my first idea would be to defend the midpoint of that range. And that's what that little dot is right there. That's that little yellow dot. So basically if I say, hey, I think this is a good opportunity to take this long back to 1140, you could look to defend the midpoint of that range, which is 988. So if price comes into this range Monday and test that zone, that could be an area to defend for a squeeze higher. So that's kind of how I use this. And then, of course, I can then home in with some additional targets. So all I got to do is pop up my style for ADR method. And then now you can see these are these are weekly targets, but I can pop up the monthly targets. There we go. So, for example, again, if this is the low of the month, if we're guessing that this is the low of the month, and I know it's just the first day of the trading of the month here, but if this HWAY ticker symbol here, if this is the low, then a high probability odds is that it's going to reach this 1133 target. And on an average month range over the last 10 months, it will see 1192. And then this would be a high probability scaling target that you should reach with ease. So again, that's how I would do this. So basically, if I think that this is a buy opportunity, I would look right here and I would say, okay, that's going to be my first entry. So if price opens Monday session above that level and drops into it, you want to have a limit order sitting there and you want to say, okay, I'm in at 988. Now say you have like, I don't know, a 30 tick stop. And say you put your stop here and it's minus 30 ticks, whatever it is. Then when price goes in your favor 30 ticks plus 30, you'll want to take half off the trade. Take half off. And once you take half off the trade, you leave your original 30 tick stop in place with the last half of the trade. And now if price comes all the way against you here, you're out break even. You're out break even. That's a much better way than doing it the other way that most folks do it. Say you get in long. Well, this is how most people would get in long. Okay, so if price opens up here, they're in long up here. Okay, market on open. And then price comes all the way against them here because inevitably price comes back against you after you get into a trade. So now you're enduring some heat in a trade. And then say price does push up and say, oh, you got your plus 30 right here. I'm going to move my stop to break even, right? So here's your entry, and you get up here and price gets up plus 30 ticks. Most of the time, a lot of novice traders will say, okay, well, now I'm going to move my stop from here and move my stop to the entry. Well, what happens after that is price comes back to the entry and then stops you out. You're out of the trade, and then it just continues onward. By taking some off the table, taking half off, you're basically putting some money in the piggy bank already. You're paying insurance in case it goes against you, and your actual break even is much, much lower instead of at the entry. So price has to go way over here just to get you out at break even. And the odds of that happening are lower when you identify significant rejection tail and everything. So this is all right. Absolutely. Thank you for your interest, and I'll check out the email. So right here, again, that's where you would look to enter, and then you would look to walk this thing up toward 1133. So you would scale after a certain amount, then scale another quarter and scale another quarter to your final target. So that's basically the idea there. So let's look at a couple of these and see if we can finish up. I mean, this one looks okay, but it's in a significantly downtrending market right now. You'd like to trade these in an uptrend or at a more clear area rejection. So I'm going to pass on that one a little bit. Same thing with this one. It's easier to see this when you have some signals up. Here we go. This is a little something there. So this is one that you can watch for right here as well. It's been in an uptrending market. It's since pulled back a little bit. It's holding the upcoming pivot range, the pivot point of the upcoming pivot range right there. So this is the pivot range for the month of April. We closed above it. We opened above it. We dropped into it. Bulls defended, and we're back at the close. So that's a pretty good opening sequence to the month. So the expectation would be that bulls are looking to defend this zone, 12s, even into 1150s, but 12s here in the upcoming session. And you could look to slingshot this back to the high. And then, of course, if you're below these lows, the trade's over. So, I mean, you're leaning on you got some very good reward risk right there, where you're only looking for a pullback into 1201s. You got your stops just below there, and whatever this distance is, it looks like 70 ticks or whatever it is, then you're looking for 70 ticks up of plus. And once price does that, you take half off the trade. And then you look to capture another quarter up here, and then maybe another quarter somewhere beyond that at a target. So again, if we look at this and we pop up the ADR Method Targets on it, here we are. This is for the week, so let's bring up the month here. There it is. And actually what I'm going to do is save it. And there we go. So now this is for the month. Again, if this is the low of the month in NAV, so if this is the low of the month, and again, we don't know, it's the first day trading day, but it's a pretty good low already. If this is the low of the month, then this target right here would be on an average month. On an average month's range, this is how far this trade can go. But right here, that's the primary target. So we don't want to get too greedy. Instead, we play to the primary target, and anything beyond that would be gravy. So 1538 is the primary. This is a high probability scaling target, and that's 1409. So again, if price is going to hold this zone, you're going to look for a retest of 12s and look for a potential squeeze. Anything below this level, you got to bail. And look to live it and trade another day. Let's see if we got another one here. That's when. Okay. All right. Well, let's take a look at some other candidates here. I'm going to bring up a different buy candidates. Again, sometimes I'll flip through these charts pretty quickly until we find something to talk about here. And what I'm looking for is just a rejection, a price rejection at some point that's favorable in the chart, really. That's all I'm looking for. You know, a pullback in an uptrending market or a pullback in a downtrending market. I'm looking for any kind of rejections at support or resistance, any kind of things like that. Or even I'm looking for sometimes very tightly coiled ranges that I can expect some expansion from. I'm also looking for any times where price has overextended itself and got a huge range, because then you can look to play fade opportunities back in the opposite direction. So there's a whole lot of things to look for. Like, for example, this is INO. And if you look at INO here over the last couple of weeks, I mean, it's gotten a significant rally here. So from here, this low, that's about 625, it's rallied all the way up to about 930. And at some point here, it's going to find a high, and then it's likely going to snap right back toward the midpoint of that initial impulse range. And when you find the top, you usually know it's the top. I mean, it's usually well-defined in some way. And then from there, you can look to fade it back downward. So sometimes that's what I'm looking for, some of these overextended ranges. This one isn't quite there just yet. We have found some pretty solid trading candidates here over the last few weeks in terms of, you know, swing trades and position trades. Oh, look, here's the one. So this is one we were looking at earlier in the week, 2 weeks ago. This is a good lesson for some of you as well. But the longer it takes for price to develop a pattern, in this case, this was a little consolidation range, but if that range forms after a downtrending move, you can view this range either as a reaccumulation phase, or you can view it a redistribution phase in a downtrending market, or as an accumulation phase that's due for a markup. And so when price drops down here and just smacks the low and just starts trading like this, I pay attention to some like this. I just put them on the back burner and watch them until you see this event right here. That event right there was significant. And basically what that was price breaking free from that range. We got an upside break, and that was a breakaway gap type of deal where it gapped up and held. And so now you're sitting on top of the range. And then price comes back to the top of the range and right here tests it. And then forms this pattern right there, that signal. And that signal is coming from this signal right here, the PivotBoss Wick Reversal. That's the one from the book. Actually, all four of these are from the book. So that one right there sits right on top of that range. And this is what I mentioned. Okay, look to defend the pullback for a shot at seeing a push higher. And man, this thing it gapped down a little bit here and just blasted off all the way up, reaching 775 from those 540s. So it was a big time rally here. Obviously, we saw it off the close. So this is one of those candidates that I like to bring in here. So there's certain times that I like to prospect. There's some times where you have, like right now on a Friday, you're looking for some of these candidates for the upcoming week. And this is a Monday night type of thing. So when Monday closes the session, I like to see what did Monday look like, and then I can trade Tuesday, Wednesday, Thursday based off of it. And so that was one of those deals where I looked up Monday, or sometimes I'll do it Tuesday morning before the market opens. But the idea is to watch for any type of significant rejection that was seen during Monday's session that could continue on Tuesday, Wednesday, and Thursday, the meat of the week. This is a deal on a Friday here where now we formed a very narrow range here. And if you look at this, over the last 5 days, 1, 2, 3, 4, 5. Over the last 5 days, it traded in this little box. And if you look down right here, you can see that right there, that is a narrow range compared to the average range. So that means that this is 65% of average range on a 5-day basis. On a 5-day range basis, it's been averaging $1.40 per 5-day range average, $1.40. And then, anything below 91 suggests that it's compression. So we traded below that here, compression. And whenever you compress below 65% of average range, that's usually about the point where you see another phase of expansion ahead. So prices are clearly coiling. It's at a point where it's now quantifiable, and you're likely going to see another breakout move away from here. So if there's any failure to hold above this 7, you could see all these longs up here, these late longs that got in. If they don't get paid above 7, the sell stops will come out, and this will come back to the 580s and 560s. So just keep that in mind. So we caught this thing on the way up here, and now you got to watch this for a potential reversal across the range. But this is a narrow range. We have this right here to quantify that for us, and we could be looking at expansion soon. So that's ODP for that opportunity. I'm going to take a look here. This is my favorite setup to look out for, but this doesn't usually bring up that many opportunities here. That was not that great. There's only a couple there. Let's look at, this is the extreme reversal setup. And usually what happens here, this is not bad. This is the rubber band trade. So this is one that I talk about in the book. So we can probably leave with this one. There's about 5 minutes left in the hour here. But basically what I look for sometimes in some of these scans is for when price is significantly overextended. So you see how price here came in, and then we rallied significantly into this top, and now we're starting to back off a little bit. That's the beginning of it. That's an impulse move that just happened and the beginning of a key range formation. So what I'm going to do is I'm going to look for the high of that move and the low of this move and bisect it. What's the midpoint? Probably somewhere around 10.5. That's the midpoint of that range. And you can look to sell it from 1160 and sell it back to 1050, right? And the way to do this now is really looking at the effect of how price becomes overextended to one side. And it's like that rubber band effect. You know, if you pull that rubber band out on each side and just pull and then release one in, it snaps back in the opposite direction. And this is kind of, you know, somebody holding the rubber band on this end and then holding it on this end and then snapping, letting go of this side, and it snaps back in the opposite direction. So that's what happens with price at times. And right here you're seeing the signal that's kind of quantifying that for us right now. This signal is different. This one is the extreme reversal signal. So the extreme reversal signal comes on the heels of massive expansion. In this case, a big expansive move in one direction. It gets overextended. This is a small digestion day. And then boom, you see the snap back in the opposite direction. So this is one of my favorite, absolute favorite setups. This is, you know, again, I make no bones about it, which is why I love to talk about it. But it was my first significantly successful algorithm that I developed, and the first one that we deployed automatically that just made money, no matter which time frame you put it in, but mostly higher time frames, because the higher in time frame you go, the more significant the price swings, right? So this was just a significant one. So having something like this on your charts is always great, but being able to see that right here, the thing that I'm looking for is this is the previous month's high, here's the previous month's close, that's the midpoint of the range. So somewhere between 1140 and 1155, when price comes into that area up here, watch for rejection. If there's rejection up here, the implication would be for a snapback. And if it snaps back in the opposite direction, we're looking for a move back to the midpoint of this range. So here's kind of what I'm talking about. When you have this big type of sell-off right here, where you have this big move, you see how it comes up to kind of a point where it gets really overdone with the ADR, and then it snaps back in the opposite direction, and then it gets very tightly coiled. You know, it snaps back and just goes like this. That's what we're looking for. We're looking for this move to snap back like that. And that's what's happening here. It built up into a big crescendo here, and now we're looking for it to snap back. So all we do here now is just bring up a fib retracement just for a moment. I can add a retracement all the way up to here. And basically we're looking for it to come back to about 1040. 1040 right there. So if you're selling somewhere off of 1160, just call it 1160 as the trigger zone. Get it down into 1040. You know, that's $1.20 right there on a $12 stock. So that's a 10% move right on down, or more than that. Yeah. Yeah, 10%. So a very nice move all the way down. So this is something I'll be watching for as we head into early next week. Um, and again, I'll be continuing to look at some of these scans, and if I see anything else that comes out, I'll make them known to you guys and gals in the morning. So that's going to do it here for today. Again, about Masters, I know I had some questions about Masters. I wasn't able to answer it all, but I just wanted to give a couple of minutes here at the very end. If you go over to PivotBossMasters.com, it'll pop it up right here. Basically, at PivotBossMasters.com, this is kind of the educational portion of PivotBoss, and I do my best to provide some top tier education that really helps connect with traders, make things easy, give you tools that really make a difference in your trading. Price-based tools, volume-based tools, price and volume-based tools, and really just show you an approach that you can use regardless of the platform you have. And that's really the big thing. Most platforms can give you the things you need with regards to VWAPs and pivots of some sort. But I'm trying to provide more of a uniform approach to analyzing the market regardless of your platform, and that's why price and volume is so important. If you can analyze the market through just simply price, you can do that with any platform. If you can do it just through volume and a good volume profile, you can do that with most platforms. The rest is all about execution and getting some of those proprietary indicators that we offer. But if you come over here to PivotBoss Masters, you can read up a little bit about what it is. It's basically a one-time fee, $9.95, and you're in. And there's over 50 hours of training in this PivotBoss Masters. But all of this training right here is legacy training, and the new training is going to be released starting next week. So you can read more about the core principles and the various core training that we offer. I believe there's 6 major core areas that every trader needs to focus on, from core principles, and that's kind of more of the theory, your analysis, your trade management, your forecasting, execution, mindset, all that stuff. So what we're going to do here is basically open this up to the public again, where when you come in, you're going to get so much benefit at the front end of your membership, and from there, once you pay in once, everything else is free. All of the extra tools and indicators that we provide, it's all included as a lifetime benefit to you, because trading is hard enough as it is. And you have to be able to trust the information you're getting. You have to know that you're getting it from the right source. And I've been doing this a whole long time. You can come in here and just read all of this, read all the great feedback. But basically, I'm going to be doing a rollout next Wednesday. So Wednesday we'll have a webinar ready to go, where I'll be able to talk more about it, show a little bit more about it behind the scenes, and then start rolling out content sequentially for those that come on and for those that have already been a part of Masters for many years now. So for those of you that are Masters members, you're about to get so much significant content and training and tools. I've polished up so many of these legacy PivotBoss scripts and code and made them tremendously better. And it's going to be fantastic to see them on your screens and get them into everyone's hands. So right now, premium members have been using a lot of these scripts already, and there's going to be more behind the scenes and also a lot more training and content to come. And it's about time. Masters, you all have been waiting a little while. And so this is going to be fantastic to roll things out in April, May, and June, heading into the summer. So the next 3 months are going to be very, very Masters intensive. And this is a great time to get in with Masters. And usually what I do as well, if you get into Masters, I also offer a free month of the PivotBoss Premium Trading Room, so you can come in and get some of that live implementation as well, along with your fellow peers and traders, which is always a lot of fun. So for those of you that wanted to know a little bit more about Masters, just kind of a sneak peek of what we'll be doing next week. So kind of save the date, next Wednesday. I'll be sending out an email, and you'll be able to see it as well. But I appreciate everybody for hanging out with me today here this afternoon. Have a fantastic rest of your Friday. Have a great weekend. Do something you love. Do something that makes you happy, and enjoy your weekend. And I'll see you again next week. So everybody take care, and I'll see you soon.